Welcome, everybody, to the Chinchilla Pickin' Podcast. It is October 27th, 2024 at 3:01 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood. I'm joined by the one and only, the incomprehensible Brandon Beaver.
Hey, how's it going?
It's
I got
going
it.
well, man. It's going. I know I threw you off there with that, didn't I?
Yeah,
I feel like we need to do something
incomprehensible. I don't.
Halloween. Yeah, I feel like we need to do something Halloweenish for the show, but I had no idea what to do. So
I don't know either.
I mean, we had the count on here. One stock, two stock. Ah, ah, ah. Have some fun with that. Probably got some license. We're probably gonna get sued. License and fee right there. Um. Oh well, who cares? Um. Yeah, yeah, no, it's been a couple weeks. We took last week off. So if you're listening to this now, you're gonna get like 2 weeks worth of news. We got a good, I feel like a good amount.
Yeah, we got a lot to get into for sure.
And we got the election coming up next week. I know we tried to stay away from being political and make everything financial stock related on this show. But next week I do plan on mention a few things that might happen and what you might want to invest with depending on who wins, you know?
Yeah,
Because there are winners in the market for either candidate,
I'm
is what
so
I believe.
tired of it though, man.
Are
I
you?
am this close to canceling my Wall Street Journal subscription. It's all politics on the headlines now. The reason why I went with the Wall Street Journal was because it was all stocks and company news. Literally for the
Yeah.
past year, it's all been politics and wars and dude, just get back to what you guys got started with. What you do well is reporting the financial news. I'm
Yes.
so sick of politics.
Everybody is. Everybody's sick and tired about it. You bring it up anywhere. Everybody's like, I just want this to be over. I hear that from a lot of people. I just want this to be over. I just want this to be over. Everybody's just tired of hearing about it.
Yeah,
Let's get to the other side of it, right?
right.
Yeah. I feel you. I feel you. I mean, if you're a Cowboys fan, you got nothing else really good going on, so it is what it is.
Hey, the NBA season started. I've got one good Dallas team to root for right now. So,
Hey, the Cowboys can still pull it out, buddy. Don't be crying now. You're
we
good.
got the 49ers tonight at 8 o'clock. I'll shave my hair if they win.
Whoa, yes, and we're posting it. Hey, if he does that, I want a picture to post on our TikTok and Instagrams for everyone to see.
Yeah. Huge Cowboys fan.
Do
They're
do you agree to that?
not going to be.
If they win, can you do that and then we'll post it on our social media?
Sure.
Yes. I am never going to root for a Dallas team so much as I will tonight. I am going to be on the edge of my couch just cheering on Dallas all night tonight.
And this start time at 8:30 is so annoying too. Guys, we work, all right, NFL we work. Move it back. Let's do 7:30 so that we can all of us that get up at 6 o'clock in the morning to go to work on Monday. We get so tired of being up until midnight to watch a football game. Do it earlier.
I don't work Mondays.
Oh.
Anyways, all right. So rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the lie back and forth, the bicker and banter right here on the show for you. As always, Brandon, you have the mic and the floor.
So here's a company that I don't think we've ever talked about on this show. And I think it belongs in your portfolio because the balance sheet has been consistently really good. The depth has been consistently really low. And I'm talking about Deckers. Um, Deckers made big news last week. Their stock had its best day, I think, in forever because they had a really good earnings report. Soaring demand from Hoka brand shoes helped Deckers Outdoor post better than expected earnings and revenue for the second quarter. The stock went much higher on Friday. Hoka sales generated 35% year over year sales increase. Decker's UGG brand was up 13%. The company raised its full year revenue outlook. By the way, I'm not usually somebody that goes into trends or fashion or anything like that, but But Deckers has been performing consistently very well over the years, enough for me to say that the company itself is not a trend.
I've never heard of Deckers before, but I've heard of its brands it owns,
Yeah,
which is
Deckers out.
weird because I've been trading stock now for coming up on 20 years, and I never knew the parent company of these companies.
I'm so surprised. Deckers has been pretty popular for a long time. Granted,
But
it
remember, I stay out
is.
of retail. I don't really
Yeah,
go into
you don't
retail.
do, yeah, that's true. You don't do retail, and I worked in retail for a much larger portion of my life than I should have. So, um, domestic revenue for Deckers rose 14.2% to $853.9 million. Surged 33% to $457.4 million internationally. Direct to consumer sales added 19.9% to $397.7 million. So I'm surprised by this, by the way, direct to consumer being very strong here, because Nike's switch to direct to consumer was a failure. Their huge focus on direct to consumer and bringing their launches out of retail, not meeting the customer where the customer is what brought Nike down. So I'm surprised that Deckers is kind of telling us a little bit of a different story, but they're managing the balance very well still. So
Well, hold on. This is a different story too because Under Armour and Nike both have had bad years. So that means people shifted away from both of those brands and went into other ones. And like what you told me, one of Decker's um, companies that they own is Hoka.
yeah,
Now, Hoka are shoes for if you're not aware, they're shoes for people who are working on concrete all the time or go on long walks in the
running,
city or have to be
running,
on their
they
feet
running
all
shoes.
day
Yeah,
running.
running
Yeah,
shoes also.
yeah, and so this is a type of shoe that specializes for a lot of people that they've been looking for, but Nike wasn't addressing it, and Under Armour wasn't addressing it. So Hoka came out and said, "Hey, we're addressing this," and now it's spread by word of mouth more than anything, organically.
Yeah. Well, and
Spread.
they've been at the conferences, the runners conferences and stuff like that too, and making creating good relationships with the runners across the country. So there's that, and Nike backed out of that, and they've been suffering as a result. Um, I mean, just early morning Friday shares for Deckers were up 12% on this report. I think they closed at about 17% higher at the end of the day. They've added 50% back to their value. So if you bought, in January, you're up about 50%. I think this continues to go higher. And I think justifiably so. So they raised their full year guidance. They're now expecting full year revenue growth of about 12% to $4.8 billion. That was up from its previous outlook of 10% to $4.7 billion. Um, I just look at this Hoka gaining 35% year over year by itself. UGG sales up 13%. Company raising its full year outlook. Dex shares, like I said, Decker's up 12% to 170.41. That was early Friday. I think they finished at about 17%. Um, just a few more highlights here. Diluted earnings per share $1.59, with revenue up 20.1% from a year ago to 100 or to $1.31 billion, both exceeding analyst estimates. Um, Now they did have a weakness here in Sanuk shares. Sales did plunge on Sanuk sandals, 47.6% to $2.8 million, but that's a small portion of their sales, small portion of the revenue, so it wasn't a big hit to them. Direct to consumer up 20%, net sales up 20%. Um, Direct to consumer comparable net sales increasing 17%. Wholesale net sales up 20%. The numbers are very good here for Deckers. They continue to be very good. Depth has been near zero for a very long time. That's awesome for anybody. They've had share repurchases that have been in the higher range that companies like this that you would expect for. I think you still buy this. I think the earnings per share right now is at about 30, but I think it's well justified. I think you buy it now. Maybe just put a little bit of money into it. If we get a market correction, then you buy more. That's my that's my recommendation for Deckers here. I never covered it before. It literally just caught my eye, but I did research on the history of the company. It's been well managed for a very long time.
Nice. Now is the are the initial founders the still the owners or no?
I don't think so.
Been
That's a
around that
good
long?
question. I
Okay.
was just looking at numbers. I wasn't actually looking at the management names because the numbers are telling me the story here. Gross
Yeah, yeah.
margin is now 55%.
Gross margin 55? Yeah,
55%, yeah.
good.
SG&A expenses as a percentage of net sales are now to about 35%. So that's still relatively high, but
What's
I think
PE?
that, huh?
What's the PE?
Price to earnings ratio is about 30. But you know, the cost
Oh,
of revenue growth here, the SG&A is about 35%, but I think that's just them expecting and investing for future growth.
yeah,
Also, they're
that's a high PE, man. To be buying in now. 30?
but that just told you the growth. I mean, look, 20% for net sales increase, so
That's
30%
true.
is not that bad. Um, the 35% SG&A expenses, I think that's indicative of them expecting to grow more, but it's also indicative of them being in a very highly competitive retail environment with companies like Nike and Skechers and Under Armour and such. Skechers having a meh year. Nike is the one that's having the worst. And unfortunately, I'm long Nike. I've owned it since I said I was going to buy it. I'm down about 8% right now. But these kind of things with business wars, they go back and forth. I do expect that Nike at some point will come back and take the edge, and I do support their new CEO. So
It's like you owning Pepsi and Coke
yeah, it is.
almost.
It is. And it's a back and forth thing that happens, right? It, Nike needs that Pepsi taste test moment.
Yeah, yeah. Yes, they need something because
Yeah.
that company is just not doing well, but they're large enough that they're still
And
going by.
they're gonna stick around. Nike will stick around. I think they'll come back. They'll they
Well,
but
you bought it, so
now
of course you believe that you own it.
right now Deckers has got the competitive edge. Very much clearly. So that's my recommendation on Deckers. That gross margin's great. The growth in revenue is great. International net sales growing 33%. So there's good opportunity there for them also. Um, buy it. Don't put a lot into it. You get a market correction and that price earnings ratio comes back down a little bit. You buy more. But I think it's something that you keep in your portfolio. They've had long enough uh, time to prove in the market that they can continuously keep their depth around zero and manage their balance sheet fine. That's the most you can ask for. So
Yeah, having your debt at zero is great. But for me to be a successful company, you don't necessarily need to have that, man. You can have some good, healthy debt if you're expanding and you got to take out a loan to build the new warehouses or distribution centers or what have you. There is a thing called, good debt, meaning you're investing in the company to grow because there's growth there to invest in. But yeah, having debt at zero is awesome.
yeah,
That's the perfect, lineup.
yep, yeah. That's I mean you're not spending any shareholders' money on anything. You're continuously keeping the earnings per share at a
Yep.
decent level with that depth. I agree. Here's a company that I'm also long on that I've been long on for a very long time, but I'm going to tell you to not buy it right now because I don't think it makes any sense to buy it. And that's GE Aerospace. Shares have been up about 90% year to date. Um, Over the past 12 months, actually. I think 70% year to date. So almost doubled here. Let me just get into the numbers here and I'll explain to you why I don't think you should buy it, but why I'm also not selling it. So adjusted revenue grew 6% year over year to 8.943 billion. GAAP revenue was at $9.84 billion. That beat. Both were beat. Total orders here increased 28% year over year to $12.6 billion. That caused some excitement in the stock. Um, but the stock did go down. I just don't think it was as much because the orders beat so handily here. The 28% year over year orders increase was a very good number. Commercial engines and services were up 29%. Defense and propulsion technologies, I don't think this is a surprise with the global environment right now. That was up 19%. Commercial engines and services, that was up 8% on revenue wise. Defense and propulsion technologies up 2% revenue wise. So the 29% and 19% that I just mentioned, that was orders. Adjusted profit margin expanded 150 basis points to 20.3%. Adjusted operating profit was $1.8 billion. There's strong demand here for sure. Otherwise, we wouldn't be seeing this increase in orders. But the reason why the revenue's not going up that high is because this isn't just something you don't put a jet engine on a assembly line and pump it out like, Henry Ford would with Model Ts. They take a long time. And we've got supply chain issues right now, by the way, that they have don't seem to have any end in sight. That's the new normal for right now, is a supply chain issue. So yes, great on the orders increase of 29%. That's awesome, but that's revenue that's going to materialize over the next few years. That's not over the next 12 months. That's, 24 to 36 months of revenue right there. So to have, for me, a price to earnings ratio for this around 30% and a stock that's increased about 90% over the last 12 months, it's at a price right now where I think it's going to struggle. Where are you going to get the kind of growth in this industry, even with General Electric, even with Larry Culp, to justify another 90% gain over the next 12 months? Go ahead, Dave.
You had me at 12 months. I was raising my hand, and then you said over the next 12 months. Yeah,
Yeah,
I can't. Not over the next 12
you
months.
can't. It doesn't make
Be-
any sense.
well, and here's what I was going to mention is the airline industry is very cyclical.
Yeah.
And airline orders and new planes happen every so many years. But because of COVID, the airline industry used that event to get rid of older planes and to revamp with newer ones at that time. So it's going to be a few more years before they put in a big amount of orders. They'll always do like their one or twosies, but the big cyclical orders won't be in for another few years. It's an effect COVID had on the airline industry as a whole, was the fact they got rid of all these old airplanes and air jets, and then they brought in new ones, and there was a big buy-in and salvage and all those other things that happened because of that. But it means that, in a few years, yes. Right
Right.
now, 12 months, no.
So what was kind of justifying the higher price earnings ratio for this company was the fact that they were in the midst of a financial turnaround and they were shoring up the balance sheet. For example, adjusted operating profit is now $6.7 billion. We were in the negative range a couple of years ago. Cash from operating activities year over year is up 34% to $4.49 billion. They had an adjusted free cash flow increase of 31%. Um, that's awesome, but the turnaround has happened. We're here now. I don't think you see that kind of increase in free cash flow and um, operating activities cash unless there's layoffs, and we don't want to see that.
Yeah,
So I don't see it justifying a price earnings ratio of 30%. I don't see it staying at this levels, but look, I've more than I'm not selling because I've more than tripled my value of what I bought into. I've got a cost average of about $56 on the stock. And
nice.
it's where is it right now? Hold on, I need to look. I looked at it before the show and now I forget. I think it's at like 170 something. So I do think that General Electric eventually will have earnings, GE Aviation that is, or Aerospace. It will have earnings that will justify $178.90 a share, which is where it's at right now. I don't think that it currently does. So I think we're going to struggle for a little bit. Um, we
That's fair
were,
enough. I mean, you had a big run up. Now you have to work with your new position and find new ways to continue the growth. That's
yeah.
nothing
So,
new.
so after earnings, the stock dropped about 8%. I think that's actually justifiable. And I think we are either going to stay flat or we're going to give a little bit more back from here. I don't mind it because I've got a perfect, I won't say perfect, but I've got a great cost, you know, average for myself. There's no reason for me to sell it. I think that we do continue growth, but I just don't think it continues growing as good as it was.
I say in a few years it will. But right now, yeah.
Well, and listen, like the fact that we're probably having a soft landing, Dave, I'm admitting that right now. That's a headwind also to General Electric Aerospace, to GE Aerospace. But you're at a point right now where how do you produce more? Unless you're going to build more factories and spend more. So I don't see a reason to buy in at this level.
Yeah. And they just spent all this time and money to shore up the balance sheet. They don't want to start going in debt to build more uh, uh the centers, in order
Exactly.
to build more.
Exactly.
Yeah. So cool.
So I give Hoka a check. I give GE right now a pass.
Gotcha. Look at that. I love this new Brandon. New year, new you. New year, new you. All right. All right. So before I get going, on what I'm going to talk about for the next 5-10 minutes here, I do want to mention it is that time of year now. It is coming up on November. Chinchilla Pickin always has a local team for the Cincinnati Arthritis Foundation Jingle Bell Run. It is sponsored by Chinchilla Pickin. Anyone who wants to come and run with me, I'm always there. Brandon shows up every now and then. But I am always there every year. If you want to come and run, please let me know. Reach out, and I will pay for your registration, and we will get you down there to run and walk or do whatever you want to do. We just thank you for supporting our charity of cause here in at Chinchilla Pickin. So that's a charity we push.
Do you
Brandon,
think that we can get Tristan or Eric to show up? I tell you what, if one of those guys show up, I'll be there.
I will get Tristan the show. Tristan, if you're listening, I know you listen. Uh, please reach out to me and we will get you signed up and registered, and we'll get Brandon there with us.
I'm not
So
saying I'm going to run. I might
you
walk.
didn't you never ran in any year before, so it's okay. All right. Having said that, now let's get into it. So I want to talk about one I talked about 2 weeks ago. I covered on the show all about Elon's companies and news events and everything. And I've talked about Tesla, and I said that the robo taxi thing was gonna be a mess when they finally came out with it. They came out with the cyber cabs, and the robo taxi wasn't as good as everybody thought. And I had mentioned at that time that Tesla was too expensive for me to buy. But I also gave a price target of where I would buy it. So if you listened to the episode 2 weeks ago, I said that I would buy if it dropped below 200. Well, guess what happened in the last 2 weeks? Tesla dropped below 200. So I have the chart pulled up here. Oh, and it was at 200 right here on 10/22, 5 days ago. It dropped below 200. It kept going down to 190. 190 is where it had actually 188.16. There you go. That was the bottom. 188.16. So if you bought that, that was right before their earnings. They went down to 188.16. So if you listen to me and you bought, congrats to you, because then it jumped right up all the way to 275, Brandon, I believe it was. Yeah,
Yeah.
275 right after their earnings. So it was a good move. It went down the bottom like I thought it would. Nobody was hyped up about the robotaxi thing, which I wasn't either. I mean, I'll be honest, I wasn't either. They're cyber cabs. It's a great idea. It's great. They aren't the best looking. It's a two-person cab right now, but hey, it is what it is. But let's go into the earnings and see why it jumped up so much. So the earnings per share, let's just go over the numbers, right? EPS, 72 cents adjusted versus 58 cents expected. Revenue was 25.18 billion versus 25.37 billion expected. So kind of flat in the revenue, but they had some cost cutting and other things that happened here. So let me talk about what happened, and this is where Elon Musk took some flack by other CEOs on this. Their net income did rise to $2.17 billion or 62 cents a share from 1.87 billion or 53 cents a share a year ago. That's their net income. The profit margins on these were bolstered because of $739 million in automotive regulatory credit revenue. What that is, automotive regulatory credit revenue. That is where automakers are required to obtain a certain amount of regulatory credits each year. If they can't meet that target, they can purchase credits from companies such as Tesla, which has excess credits because they make only electric vehicles. And these are some of the strange laws that we have here in this land we call the United States. So because of these rules and laws of doing business, Tesla made an extra $739 million in that those 3 months just because of that. So if you look at their net income of 2.17 billion, that means 33.3% of their total net income was because of automotive regulatory credit revenue. And
Which was
they took some
actually
heat.
which
Go
was
ahead.
it was actually lower than what a lot of analysts expected.
Yes. Yes. But Tesla's taken heat from this from the likes of Mark Cuban being very vocal about the fact that, hey, they're actually not making as much money as we all think. It's just from these credits and that it's not really a strong company. Well, I will point out that they are still profitable and having a positive net income, even if you take those out. So I'll
Yeah.
just make that
The,
statement
the
right there.
politicians that Mark Cuban voted for are the reason why he's getting those credits. So
There, exactly. There you go. Automotive revenue increased 2%. So there was a big jump there. But energy generation and storage revenue. So that's like the Tesla solar panels, that's the Tesla chargers, so on and so forth. That rose by 52%. That went to 2.38 billion last quarter, which is, and then all other services and everything else was 2.79 billion, and it rose by 29%. So automotives didn't have a huge rise, but it was the difference was made up by the energy generation and storage, which is very very interesting. Um, so basically, on some of the highlights of this, the lower cost EV, that's not that the Cybercab, not really being panned by all critics, but the Cybertruck was the third best selling fully electric vehicle in the United States, behind two other Tesla fully electric vehicles. Cybertruck has done well. It sold more than 16,000 Cybertrucks just in the third quarter alone. Um, it's achieved a positive gross margin for the first time, quote unquote, from Tesla. So now they're making these Cybertrucks and at a positive gross margin.
yeah.
First thoughts, any Brandon, of anything right now on these Tesla numbers?
I have two. This is one good example of why I say the politics of the CEO really doesn't matter. Here you have a Trump supporter selling electric vehicles and doing well.
Right. Yep.
Right. Number two, I think that part of the reason that the stock increased the way that it did is here we are late in 2024 and we're still saying we're going to have a electric vehicle priced at less than $30,000 hit the market next year, and we're sticking to a timeline on Tesla right now, which is the first time I can remember that ever happening.
Yeah. I mean, so Elon Musk is he's not he's known for putting out very like putting out goals that are very very like hard to attain, very like far out there goals is how it's looked at by other people, but he comes close. He never really hits those goals. It's usually a few quarters later or a year later, and he finally achieves what he said he was going to achieve. I believe that's just his part of leading his companies is he pushes to achieve goals that everybody else sees as unattainable, but then he does attain them just a little bit later than we thought.
Right, right. I just think investors, they heard about the low cost EV again, and they were like, "Oh, that's still happening next year? Awesome!"
We need a low cost EV, and especially because you're competing with China. Because China's companies such as BYD and Geely, Li Auto and NIO, these are all companies that are heavily subsidized by the Chinese government, and they're able to produce EVs in China for $10,000.
Okay.
Now there'll be tariffs when they come over here and such forth, but still, it's going to be a very inexpensive car
Yeah.
for people to buy, and that's who Musk is and Tesla. Sorry, Tesla is competing directly against,
Yep.
and it's very hard, very hard. Overall, though, I made some good money off of this quick trade. I think at one point I just need to stop trading Tesla and just leave my money in and invest. I can't help it because Tesla channels and moves up and down so volatile, so much. The huge moves that I enjoy doing the trades. I mean that I don't have anything else other than to
Yeah.
say
You
that
know
I
what?
probably should just own it, but I enjoy trading it because it moves up and down so much.
Yeah. The volatility's always been very high on Tesla.
Yeah.
On very Tesla. I don't, the whole Chinese thing, they put all their government money into the EVs and stuff. Would I want our country to do that? Absolutely not. But if I was president, I would say, hey, bring those over here. Elon, cry me a river. Sorry for your luck. We're bringing prices down. Let the Chinese do the stupid thing of pumping a bunch of money into, incentives for their companies to make stuff. That's fine. They can waste all their money they want. We can benefit over here in the United States. The consumer can benefit. That's what I would do. But we're not a show about politics, so
I mean, yeah, what we're talking about tariffs and the economy and companies right now. That's what we did with TVs.
yeah. And look at the price of TVs and laptops, and yeah. I mean,
Yeah.
free
So
market, free market, baby.
there's yeah, there's that. Yeah, so that's some news right there from Tesla. I want to talk right now. Let's switch gears. So Tesla, I traded it. I made money. I was very happy. I hope everyone listening who are listeners did as well. Maybe, maybe not. Maybe people don't feel comfortable doing trading like I trade. I do have long-term investments as well. One of my long-term investments I hold is Google. So if you want a long-term investment call from me, that's one that I hold and I will hold for
Google,
a
Google's
ever
Google's an interesting one. They've got earnings coming up.
this week.
Right,
Yes.
right. And the stock hasn't performed nearly as good as Meta. I'm long Google as well. I've held it for a while. But, and they've got legal challenges and things like that. I actually think that as far as the tech giants go and everybody that's reporting for next week, I think the bar is set the lowest for Google to clear.
Yes, yes. And that's why I'm really loving the fact that it's a good opportunity for Google to jump back up to where it was earlier this year around the 180, 190 range. If they come in with a good plan, a good organization, and good numbers.
Yeah,
I feel like they can easily achieve that by the end of the year.
right. Me too.
We'll see though. But right now, let's switch gears over to credit cards and finances. So, Brandon, I mentioned I was going to talk about this at before the show started, but I'm going to go off this article right here. This is a Reuters news article. The headline reads: New York is probing the legality of the Capital One Discover merger. It's written by Jonathan Stemple. It goes in to talk about how the New York Attorney General Letitia James is investigating whether Capital One's proposed 35.3 billion takeover of Discover violates the state's antitrust law. What's going on is I actually here let me just read a couple of these things, right? So Capital One respectively has more than 9.5 billion dollars and Discover has $6.5 billion worth of credit card loans right now. Uh, the impact of the merger would be particularly felt by often vulnerable New Yorkers with subprime credit scores. So they're looking at that particular class of individuals, according to the documents filed, is what they're trying to say protect, if you will. Capital One has about $480 billion of assets as of June 30th. They were actually reporting this week as well. Discover has about 900 reported 965 million third quarter profit last week. So Capital One has said in a statement that they're going to respond to Letitia James only through appropriate legal channels. They believe they're well positioned to win this merger approval from the federal banking regulators. They think they have a strong case because there are many other credit card companies out there. It's an all stock merger announced in February. I know those aren't your favorite, Brandon, but that's what this is. It would create the largest U.S. credit card issuer of more than $250 billion of outstanding loans. That is surpassing JP Morgan Chase, and it has access to more than 350 million cardholders. One thing here is so the Attorney General saying that Capital One's lead as the largest U.S. subprime card issuer.
Yes.
It's going to extend that lead. It's going to the combined company has a market share of more than 30% after this merger, and that's one of the issues that her office has with this issue and making it um, and filing this lawsuit. They say they hope to have this all said and done and close the merger by early 2025. Brandon, thoughts?
I'm going to give you a new challenge. You know, they do the TikTok challenges and everything. Ask
Yes.
around to all of your friends and see if you can't find one person that Capital One has tried to sue.
Sue?
Yes, because Capital One is so bad with the subprime stuff that anybody who has been broke at one point in their life, which is almost everybody, especially in
Yeah.
their 20s, has had a Capital One card. And a lot of them have been sued because
Really?
because they went and, defaulted on the loan, and Capital One is sue happy with that kind of stuff. But there's a lot of defaults with Capital. I would venture a guess. I'm not even looking at the stats right now. I would bet you that Capital One probably leads the active credit card companies in outstanding debt and
Hmm.
defaults. I would stake money on it.
That's weird because you know what? I got a Capital One credit card years back when I was going through a tough time.
Yeah.
I still have it today. I just kept it, but I've never had any issue
Yeah.
with them. I mean, but I pay my debts every month. So
Right, right. But they loan to anybody.
yeah. Yeah, oh yeah,
Anybody.
I think my credit score when I got the car was like 580. My lowest I hit was 505. That was the lowest I hit at that
Whew,
time in
that's
my
that
life.
is low.
I know it's like you have to actively try to get bad credit to get down that low.
Yeah.
Yeah. Yeah, that was my poor period where you met me.
Mhm. At the very beginning with that car that you couldn't get into. And you had
I
to
had
go
to hop
through
over
it.
because I couldn't unlock the door. Yeah. Good exercise. I was thin. I was thin.
Yeah.
Anyways, yeah, this merger, if it goes through, that means Capital One doesn't have to use Visa or MasterCard anymore. I think they still will. I'm sure they have long-term agreements and contracts with them, but this gives them another option that they could probably levy on and lean on more.
It's kind of another thing that goes with Visa, MasterCard, and even Discover in the credit card industry is just such a slow growth industry. And there's so many reasons why. Look at what they have to go through. There's a whole like bureau of different representatives from different companies like Visa, MasterCard, Capital One, even and different banks and stuff like that all have to vote on changes that are made to these credit cards and innovations that are made. That it's just such a slow process. It takes 10 years for anything to happen in this industry because of it. It is a very oddly ran industry, very oddly ran, and that's why I just stay out of it because if you got the growth that's good. If you could find a situation where you got like a price earnings ratio of like 8 and in a company that's growing right around there, then fine, but it's just not there for me.
Gotcha. Yep. Yeah. And it's hard, like you said, it's hard. There's like four major players: American
Yeah.
Express, Visa, MasterCard, Discover.
Yeah, and you would think that moat that is resulted from it being a small, amount of leaders in the industry would mean good growth for these companies and good opportunities, but it's just the way they're ran. It's just so weird.
Yeah. All right, so I'm not buying either company based off this. I mean, if you were going to buy one, you would buy Discover. If I did not check because I found this article just about 40 minutes before the show, but I did not check the current price of Discover and if it was at or below the buy price. I think we're still at least 3 to 4 months from this case alone being settled. So I'm not going to buy it off this merger and think in hopes that it goes through. I think you've got plenty of time to see where this thing heads.
Yeah, and my M&A deals are all cash. So,
Right? I know you don't like the stock. Be
Yeah.
like cash only. Cash money for Brandon.
Yeah.
All right. Ready? Let's go into the earnings coming up this week. And there is a lot of earnings, heavy earnings week. Monday is the lightest day of the week. There's not much going on Monday. But as I go through here, Ford Motor Company is one of the biggest coming out on Monday. There's a lot of realty housing companies this week, but Ford Motor on Monday, that's one definitely 100% looking at. I'm scrolling through this list as I'm trying to talk and cover these things. If you don't know what I'm doing, you got JetBlue on Tuesday, but you also have McDonald's, PayPal, Pfizer is one I want to see the news on Tuesday and see kind of where that goes with it. AMD's also on Tuesday, which is going to give us a good look at AI and chips. Alphabet after the bell on Tuesday. That's definitely one because I am a stockholder. I'm going to take a look at see what they come in at. For all of us gamers, Electronic Arts is also on Tuesday. So if you're a big gamer and you want to see how they're if what they're going to list of any new gaming things coming out. And just to make Brandon mad, Reddit is coming in reporting earnings. They said that they're just going to report just to let Brandon Beaver know that they're still here and relevant. Um, I don't know why I find that hilarious. It's just because of what you said in the past. Eli Lilly, another big pharma company, coming out on Wednesday. Eli Lilly, GE Healthcare on Wednesday, coming out on Wednesday as well. So a number of big healthcare companies coming out this week. Nothing else I'm really looking at on Wednesday, just Kraft Heinz and Meta. Meta's coming out on Wednesday before the bell. After the bell, we're looking at again, nothing much here that's really catching my radar so far. I'm scrolling down. Coinbase, there you go. That's one I'm definitely looking at. Coinbase on Wednesday after the bell. What do you think for Meta? What do you think it's going to be up, down, good, bad? Predictions?
Uh, I think we're gonna go higher.
Gonna go.
I'll
Oh,
say
gonna move
higher. I'll
higher.
say higher. But if I was going to make a trade on all these tech earnings coming up, it would probably be Nvidia
Okay.
because I think that all these tech companies are going to announce more capital expenditures on AI and chips and stuff like that. Nvidia is going to be the clear winner there. I'm not buying it to hold it at this level. If I was to buy something and hold it at the level that it's currently at, it might be Taiwan Semiconductors. Um,
Well, Taiwan's having some issues with China because their chips made it in companies that they have agreements with the United States that they would not sell to. And that came out, and Taiwan Semiconductor stopped shipping to a number of Chinese suppliers and other companies immediately due to that. This all broke out this weekend.
yeah, but you know what else came out is that their Phoenix fabrication,
Yeah,
everybody's worried about the fact that they have to pay higher wages here in the United States, what that would do to margin. Phoenix is 4% higher in margin than Taiwan,
really,
which is wild to me. That's crazy. I did not expect that to happen. It's good news.
it is
So,
good news. Microsoft comes out Wednesday after the bell as well. I don't see Nvidia yet. I mean, you mentioned them. Starbucks comes out Wednesday after the bell. Like we're gonna. I mean, the
well,
show's gonna be
no, so
written
I,
next
I
week.
honestly don't know when Nvidia's earnings are going to be, but I think all of, when you talk about Google and Meta and they come out with earnings, they're probably going to talk about their capital expenditures in AI, and I think those are going to increase, and I think Nvidia's stock price will go up because of it.
Gotcha. One company I own, Altria Mo, they report on Thursday. That's definitely one that I keep an eye on because I own it. I'm a stockholder. I like their dividend is why their dividend makes it worthwhile to me. But I don't buy them at $50 a share. I wait for it to drop because it goes up and down. But then I usually buy more. Amazon on Thursday, Apple on Thursday, like almost all the big seven are reporting this week. So you kind of pick one to follow, but they're all going to report. And so it's a lot of heavy earnings. Then we get into Friday, uh, oil, Dominion Energy, Exxon Oil, Imperial Oil. We're going to get some good oil companies coming up here. TXNM Energy. Um, yeah, so that's what we're looking at this week for earnings. The Fab Seven, a lot of
Yeah,
them this week.
Google, Meta, obviously, because we're both shareholders of those companies.
I'm
But
not shareholder of Meta. You are.
Oh, well, okay.
Yeah,
But
yeah.
but
Google, we both are.
McDonald's with the whole E. coli thing. We'll see if they comment on that. Kraft
Well, last
Heinz,
quarter McDonald's missed, and it was because remember the pricing thing,
yeah.
and they lowered their prices and they redid their menu. So let's see, is that going to make a difference this quickly, one quarter, um, or not? Or do you think it's not going to make a difference? I don't
I don't
know.
have any faith in them right now. I think they've been mismanaged for about a decade.
There you go. There you go.
Um, Kraft Heinz, I'm not buying, but I always like to listen to the earnings calls of the consumer staples just to try to get the, health of the consumer
Gotcha.
on that.
Final thoughts, Brandon. Take us away.
Well, I'm not buying Nvidia as an investment. May trade it, not investing. I don't think that the growth that's been happening can continue. I don't think it's physically possible unless we find an alien space civilization for them to sell to.
I think it
Where else
is
does
for
it
the
come
next
from?
for the next 2 years. Yes, it is.
Maybe not.
We
Yeah,
should have
but
talked about that because we could have argued.
so yeah, we could. I don't know 2 years either, but maybe 2 years. But when I like to buy, I like to hold my stocks for a very long time. I like to plan
Fair
for
enough.
a decade out, and unless Planet Xenon contacts us anytime soon and needs some AI, chips, it's gonna be tough for them to continue the kind of growth and justify the multiples that they have right now.
Wonder what those tariffs will be.
Right?
All right, my final thought is lots of earnings. Earnings are a great opportunity to trade stocks if you're a trader. However, trading is very risky. Majority of all retail investors are not successful at trading. They're more successful at investing, which is what Brandon focuses on. I invest and I trade. Uh, if I post anything, because I have in the past, that hey, I'm buying this today. There's usually a timestamp like 7:30 a.m. I may even put that in the subject line. That's important to know because if you're reading the social media post and it's noon, you may have missed out. That's why I put that in there when I put a timestamp. So keep an eye on that. Trading's very risky, but I do it when we have earnings weeks like this with a million companies reporting earnings. I'm being hyperbolic, but lots of companies reporting earnings. It's great opportunity to buy and sell and trade in my book. So
Mhm.
all right. Don't forget Jingle Bell Run. Again, reach out if you want to join us for the Jingle Bell Run. Chinchilla Picking will pay for your registration fee. Unless we run out of money, then we will stop at some point. But please reach out if you're interested in joining us and seeing Brandon run. And hopefully the Cowboys win, so Brandon will run with a shaved head. So even better, double the fun. All right. Thank you for listening. Please hit the subscribe button. As always, we hope that we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.